and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This week, April jobs are in focus.
It's a very, very good labor market for workers.
The demand for labor, obviously, much stronger than the supply.
This Friday, Tom, John, Lisa, and Mike will bring you the data and analysis as the numbers cross the Bloomberg.
As long as the numbers hold up, the Fed is going to feel encouraged.
Then 75 in June is certainly not out of the question.
To me, the question is, are we fully employed?
The elephant is the war in Ukraine.
The April Jobs Report, Friday on Bloomberg Television and Radio.
Well, I think we're going to hold 110 to 150. We've wobbled below 110, as you know, on Brent, but now we're back in the range that I anticipated.
He's one of the best. Paul Sankey of Sankey Research, the founder and lead analyst from New York City this morning. Good morning, Tom Keene, Lisa Bramett, and Jonathan Ferro. Futures negative 0.6% on the S&P. On the Nasdaq 100, down another 0.8%. Look out below. The yield's coming up about 5 basis points, 3.0908 on a 10-year. Just to get you ready for the day ahead, 380k is the payrolls estimate in our survey. The number comes out in about an hour and 12 minutes from now. Then it's on to next week, May 11th. The estimate so far, very few estimates coming in, but at the moment, the estimate at least, stripping out food, stripping out energy. I know useless for a lot of you at home, but that's just what central bankers do sometimes. 6.1% down from 6.5. Just where the estimates stand, Tom. Moving target, but slowly coming together.
Now, moving targets are coming together, and of course, that staggers forward to what ECB will do off Bank of England yesterday. This is a jobs day. It's an important jobs day, but the news flow, absolutely extraordinary. In the last hour, we spoke to our Emily Wilkins about the sensitivities in Washington of U.S. intelligence and the sinking, I should say, of that very large and important Russian ship. Maria Tadeo is in Salzburg, Austria this morning. My first read of the weekend, Maria Tadeo, is the wonderful Kimberly Martin of Barnard and the Harriman Institute on her expertise, which is the 800-mile border of Finland with Russia. Finland has a navy. Is their Navy at risk because of these reports out of NBC News brought on by the New York Times and the Washington Post of U.S. intelligence in the sinking of Russian assets?
Well, Tom, what we know is that Finland will apply for NATO membership. I mean, this is not official, but as you know, I was in Helsinki about 3 weeks ago, and to me, it was crystal clear. Every MP that I spoke to behind the scenes told me we are going to apply to NATO, and that could happen by mid-May, so in just a few days' time. This is a complete change to the foreign policy that Finland's had for, well, 60 years with the Russians, in which they always pledged to be neutral. And of course, they've always said that that was the best way to guarantee the safety of the country and that big border. Remember, the Russian invasion that happened in the Second World War, it was through that point. I think, having said that, they will worry about this because they feel on the interim, they're not protected by NATO. We know what happens when you're not protected by NATO. You look at Ukraine and the situation there. So for the Finnish, the next 3 weeks will be very, very delicate. And they're already, by the way, warning about this, saying we need help from our European allies if something were to happen. It's a very difficult, tricky 3 weeks before this membership is applied and hopefully accepted by the rest of NATO countries.
Maria, with all of your work, and I mean hard work and travel here, do you assume, Maria Tadeo, that all of these different countries greet U.S. intelligence? They all want the U.S. intelligence?
Oh, that they want it, they definitely do, Tom. And I would also say, and I was, by the way, just debating this with a number of officials off the record here about 15 minutes ago, and they still said, or told me, and I thought this was quite remarkable, that the U.S. had proven to be the policeman of the world. Once again, remember, we talked about in Europe this decline of American diplomacy, the decline of the U.S. Leading big foreign affairs. Well, today I had from a number of officials telling me, well, the intelligence was on point, it was perfect, they got it right. The timing, they got it right. And when you speak to Ukrainians, they also say it's not just the weapons. This intel that the U.S. shares with us has allowed Ukraine to stay very competitive in this war, where in principle, the Ukrainians should have lost weeks ago. This was an army that was almost outnumbered 10-1, Tom.
Emily, this is the international scene. On the domestic scene, we're about an hour, a little bit more, toward the labor market report that's expected to come in with another strong print. How is the U.S. going to spin this at a time when there are these constraints that are actually pushing up inflation costs, and then you see that wage inflation on top of it?
I think we are going to continue to see President Joe Biden continue the message of looking at unemployment. We're expecting to see that unemployment rate tick down to 3.5%. That's certainly something that Biden and Democrats can tout as an example that they've been able to bring the U.S. economy back from where it was to a pre-pandemic level. But Lisa, you're absolutely right. I mean, a wage growth, which we're again expecting to see in this report, is not keeping up with inflation. That's going to be a major issue for Democrats come November. Certainly something that Republicans have hit Democrats on again and again and again. And to a certain extent, with the American voters, you know, it's good that people are back in jobs, but there's a lot of concern about the costs at the grocery store, the costs at the pump. That's really something that the Biden administration is focused on trying to find ways to address. We've seen lawmakers discuss that with potential legislation that could address supply chains and other bottlenecks. But to a certain extent, this is out of the White House's hands. It's a global issue, and certainly they're looking to the Fed to see what they can do as far as bringing those interest rates down.
Emily, thank you. As always, Emily Wilkins and Maria Tadeo. Secretary Walsh coming up a little bit later on Bloomberg Television and on Bloomberg Radio. Not on the radar right now, but I think this is important. The unions representing the port workers in LA, there's a round of negotiations coming up soon, Tom, that Secretary Walsh may well be involved in. And we need to talk about the terms of those negotiations. And at what point are you leveraging the power you have as an employee or holding the economy hostage? That's a very, very difficult line to tread, I think, in the coming weeks as those negotiations continue.
The Los Angeles Times has done great work on this, John. And the fact is these are exceptionally delicate matters, as you allude to. The macro piece for Secretary Walsh is every study of Shanghai and all their lockdown issues. Every study of freight dynamics says this problem is not going away.
The White House perspective, Lisa, coming up about an hour or so after the number drops.
And I think back to the Bank of England's decision yesterday. They want inflation in wages to some degree to offset the real cost of living, which has actually been skyrocketing, and real wages have been plunging. How does the U.S. deal with that also at a time when actually wage momentum upward is going to be a negative in terms of the longer-term outlook for inflation in the U.S.? It's a very hard needle to thread.
The central bank has struggled to speak to Main Street. Yeah. Governor Bailey yesterday at times, it was kind of awkward. Lisa, the Fed chairman this week started the news conference by directly addressing the American people.
They can't seem tone deaf because people are really feeling this one. It's not some sort of esoteric, larger macroeconomic picture. You don't agree, Tom?
It's not their job. It's not their mandate. I mean, it's great that they're, sensitive and all that, but this is all new territory. The wokedom of central banks is all new territory.
Well, Tom, you've also got to go back to the era of inflation targeting, the era of central bank independence. They were meant to be not accounted for by the electorate because they were meant to make the hard decisions to keep inflation low. And ultimately, in the minds of some people, they have utterly failed, totally failed. And that's why they're back under the spotlight in a massive way.
I can feel the mail coming in already.
I bet. Futures down 0.6 on the S&P. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Two numbers pop out
off the page to me this morning from the team over at Bank of America with Michael Hartnett, 49 at 77. 49% of the NASDAQ trading more than 50% below 52-week highs. The other one, 77, 77% of the index already in a bear market. That's the destruction beneath the surface of the overall index. If you just lift the lid and get in there, it's really messy. Futures right now down 0.6% on the S&P. On the Nasdaq 100 down about 0.8%. Through Thursday into the close. Yes, yesterday was ugly, but ultimately on the week coming into Friday, only down by 0.03%. It hasn't been that calm, hasn't felt that way, I know, but that's just the number, the stat coming into Friday, Tom, with futures down another 0.9% now.
And John, this is important at 7:30 in the morning. Folks, the tape hasn't adjusted yet. John, this is a fragile tape. We haven't said that enough.
There's no bounce. We're breaking down again. In fact, again, over the last 10 minutes, Tom, down about 1% on the Nasdaq 100. That's the equity story. The bond market picture, for a lot of people, very confusing because yields just keep breaking out. And they did that again yesterday. And they're doing it again this morning by 5 basis points on a 10-year to 3.0888%. Let's just round it up, Tom, and call it 3.1. That's been a surprising thing about the last couple of months. We talked all about this aggressive Fed, started pricing up the front end for a big move, some front loading from the Federal Reserve, and the long end yields, 10s and 30s, just kept grinding higher.
John, the vanilla spread is not back to the steepness of yesterday, but we've made a lot of headway here from 3 a.m. So you're getting some curve steepening, not to be inflammatory, along with that yield move this morning of, say, 5 beeps.
I'm catching up with Mohamed Al-Erin a little bit later this morning.
Oh, you will?
Just after the open, about 9:30 Eastern time. He's picked up on this point. Others have too. We're seeing 10 basis point moves here and there without an immediate catalyst. Mohamed's worried about some of the liquidity out there. We can talk about that a little bit later this morning. That's the bond market. Here's foreign exchange. I'll just finish on sterling after a big move yesterday. Cable, 123.59. Had a little look at 122. Kit Duke saying this morning over at SocGen, the penny's finally dropped. Rates are going up. Growth is going to slow. And that's hurting the Bank of England. Does the ECB have to grapple with the same dilemma when they meet next month? That's a big topic of conversation, Tom, coming up.
What is the phrase, the penny? What'd you say, the penny?
The penny is finally dropped. You don't say that here?
No,
that's lost on you.
Original.
Is that foreign?
Yeah, it's lost in translation.
Okay. I can translate
like a British
later.
penny.
Yeah. Does
John,
that not make sense? No?
Do you remember like shillings and farthings and all that Charles Dickens stuff?
A little bit before my time, Charles Dickens stuff is, Tom.
Okay, I was always lost by that.
I'm lost by it now. Why are we talking about this?
I don't know.
Okay, I've got a treat for you, Tom. On single names, on some movers this morning.
Oh, please.
Drum roll. Bramo is going to run you through name by name.
I did not know this.
Watch how this works, Tom. DoorDash, Sal.
I knew that you were going to do this. That's why I was laughing. I was already laughing.
Oh, my God. Bond Girl does equities.
No, I'm not going to, listen, I'm not going to give recommendations or disrecommendations considering my bearish tilt. But this actually, I'm really happy to do this because DoorDash, this speaks frankly to Tom Keane's household and how he orders McDonald's. It is with DoorDash and then it delivers it to the Keane household. DoorDash just reported earnings and they're actually up in the pre-market more than 6% because it wasn't gasp horrendous. I mean, just to put this in perspective, DoorDash's shares are down 50% year to date heading into this session because of the reopening trade and how much they've gotten beaten up. Zillow is a perfect example of the slowdown that we're seeing in the housing market. Shares down almost 14% after reporting that the look ahead really speaks to a lack of sales, a lack of actual transactions because the supply isn't there. And frankly, people are getting nervous with mortgage rates at the highest level since 2009. DraftKings, everyone wants to bet on sports, and so those shares are up almost 7%.
Did you bet last night on DraftKings on the Mets coming back against the Phillies?
I know that Dan Ives is betting on a Subway series, and that was what he was tweeting about.
Okay,
they're doing very well,
please.
but
He's a big
really,
Mets fan, isn't he?
Yeah,
Lisa,
he's a big
Dan
Mets fan. Yeah, and so is Mohamed Al-Erin, so I'm sure you can get his view too, John, coming up. If you take a look at what is actually winning amid all this carnage, it really is the energy sector. And I find this amazing after the gains that we've already seen of more than 50% of the likes of even Exxon. Shares still up in pre-market. This is where people are hiding, $91.05. Occidental Petroleum has gotten a real boost after reporting good earnings, boosting dividends by almost twice, and getting a show of support from Warren Buffett. Marathon Oil. I find this fascinating, up 1.3% after already having a blockbuster year, although Occidental Petroleum shares up more than 100% so far year to date and still getting an extra boost.
What do you think, John? Never again?
No, I think we do this again multiple
I
times.
think multiple times.
I don't mind the bearish tilt, and a lot of people enjoy it. I love that, Lisa.
Did you see me standing there?
It wasn't bearish. Was there any aspect of bearishness
I
to
think
this?
we alternate between Bramo and Tom doing this.
Yeah, you know.
If Bramo does Monday,
John, I would just do Dow stocks. I would just
do Dow stocks.
And Econocopter.
They're going to be data dependent.
Okay. Let's move on right now. The news flow extraordinary. John, very importantly, we're out to two big figures on the VIX. John, I've got to say right now, equities deteriorate.
We're down 0.9% on the Nasdaq, Tom. We're not getting a bounce this morning. Bottom line.
We have been walk softly, Lisa. We have been short here on the jobs report this morning. We're going to adjust that right now with a phenomenal sensitivity analysis by our Andrew Husby out of Bloomberg Economics, the summary of which is if the participation rate moves, things happen. Husby, if the participation rate recovers about half to the pre-pandemic high, it would only take employment growth of 350,000 per month to get to a 3.0% unemployment this year. That is a stunning piece of what-if research. Julia Coronado is expert at this with macro policy perspectives as well. Julia, what is the level of that our fully employed is?
The level in terms of number of jobs that we have left to fill?
No, how fully employed are we?
We're not quite fully employed. The participation rate, as your research suggests, is recovering. It's been recovering quite rapidly. In fact, prime age labor force participation, that recovery has been accelerating steadily since January. So 1/10, 2/10, 3/10 in March. So it looks like with a strong job market, rising wages, rising inflation, and fading fiscal support, people are coming back to the job market. And we hear that in earnings reports. Companies are actually reporting that they're having an easier time filling jobs. You also see that in the NFIB. So it doesn't quite show up in the JOLTS data, but we are hearing a lot of information and seeing it in surveys that there is some balancing of supply and demand that Chair Powell talked about. And so we'll look at the report today, but I expect another gain in labor force participation, and I expect a cooling in labor demand. We see that in the ISM surveys. People are nearing their staffing goals. And now they're more nervous about the outlook. So we should see numbers. 350 is an extremely strong number. We're at 340 for today, but I would fully expect numbers closer to the 200,000 as we move through the year.
Julia, do you think that the Fed can be data dependent when Fed Chair Jay Powell basically locked in the progression of rate hikes at 50 basis points over the next 3 sessions?
I mean, I think what Chair Powell expressed was enough confidence that the job market is strong enough and labor demand is strong enough that we can get, 2 more 50 basis point rate hikes before they need to sort of even consider slowing down or taking a look around. And that just speaks to just how incredibly strong the job market is. So to Tom's earlier reference to Dickens, it's the best of times and the worst of times. In the labor market, it's the best of times for workers. And so, we do see that balancing coming back into view after an extreme imbalance last year.
I'm stunned by the Charles Dickens comment there. I
was ready for you, Tom.
The difference,
I came for you, Tom.
Yeah, you really nailed it. The pain of parting is nothing to the joy of meeting again. Okay, we can continue now. Julia, we've got a small issue at the Hoover Institution today. Our Michael McKee will speak with Mr. Quarles about the Fed, and what's got to come up is the Fed actions of the last 90 days of last year, where maybe they didn't act because they were trying to figure out the nomination policy, a process, I should say. Does this have traction?
I'm very disappointed in former Vice Chair Quarles in sort of suggesting this kind of dynamic. I think he's just doing a disservice to the institution. So I don't really want to dignify that. I think I have a lot of faith that Chair Powell acts does his level best to act in the best interest of the medium-term stability of the economy. So I'm not going to go and do Monday morning quarterbacking of what they did last year. I think there were reasons that they were expecting inflation to moderate. We've gotten hit by shock after shock, and now they're moving quickly. You got to give them credit for pivoting as quickly as they have, and they can pivot again if the data demand it. So I think this is a data-dependent Fed. I think they're trying to look through the noise, and there has been extreme noise. This has been one of the most incredible shocks the economy has ever experienced. We've seen the biggest change in what consumers buy since World War II. So I think, we've got to give the economy some time to get its legs underneath it and adjust to this composition. And meanwhile, the Fed is trying to look through all of those adjustments and figure out what the medium term looks like. So I really don't want to go there, actually.
Well, you did go there in a way, Julia, because you said it didn't matter. And I think it does. And I'll tell you why I think it does and why we should spend more time on it. Essentially, a former Fed official is questioning the credibility, the timing of this pivot. That has implications for whether this is a credible pivot or not, or whether this is just driven by Chairman Powell, who was looking for a second term. That's one Fed official saying that. Why is the voice of the former governor, Xau&Usd, not a credible one?
We've seen this a lot before. When Kevin Warsh left the Fed, he also had some nasty things to say as he was kind of positioning for his post-Fed career. So, again, what good is it going to do us to examine this? I think if you look at, say, the value of the dollar and the yield curve, you've got some votes of confidence from the market that, it's going to be a volatile time, but the Fed is going to manage us to price stability in some way, shape, or form. Might take more pain or less pain, but they're going to get us there. And I think that's ultimately what we have the Fed there to do, is to do the hard work. So far it's not always pretty. And you can certainly, do this political second guessing, but I think the people that are in those seats right now are people that are trying to do the right thing and trying to do their job.
Julia, we appreciate your perspective, as always. Julia Coronado there of Macro Policy Perspectives on this Payrolls Friday. Good morning to you all. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The United Nations says global food prices continue to hover near an all-time high. The crop trade has been disrupted by the war in Ukraine. The country has been one of the world's largest shippers of wheat and vegetable oil. High fertilizer prices and drought have added to the problem. The U.S. is warning Russian billionaires there is no hiding place for their yachts. That came as authorities seized a $325 million super yacht the U.S. claims is owned by Russian billionaire Salomon Karamov. He's accused of money laundering and conspiracy. The U.S. worked with officials in Fiji to seize the vessel. In the UK, Prime Minister Boris Johnson's Conservatives lost seats across England in local elections, and they lost control in 3 London strongholds. But Johnson appears to have avoided the sort of disaster that might have triggered another attempt by members of his party to replace him. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.